the elite.
Back with first trades right here on ET Now. The big story this morning, of course, has been the fact the government has sharply raised import duties on gold and silver to 15% from the earlier 6%. That's clearly a three-time jump that one has seen, and that's a major move aimed at curbing the precious metal imports and protecting foreign exchange reserves as well. The decision, of course, comes just days after PM Modi urged citizens to avoid buying gold for a year in the national interest. What does this really mean for the sector and the economy? Ashesha is here with that insight.
In line with Prime Minister Narendra Modi's appeal to go ahead and reduce gold purchases for the next 1 year, the government now has come out with a notification where they've gone ahead and increased import duty on gold and silver imports from 6% earlier to 15% now, which is an increase of 9 percentage points. And this is in sync with what Prime Minister Narendra Modi alluded to over the weekend, because this is weighing heavy on India's forex reserves. So in order to curb forex outflow from India, the government has now gone ahead and increased import duty on gold and silver. So why has the hike been done? 4 important reasons. One, as I mentioned, to curb rising imports. It will now go ahead and put lesser pressure on forex reserve, which has been the case for the last several months. It will help in narrowing India's trade deficit, and it will also support the weakening rupee. Remember, Indian rupee hit a fresh record low yet again versus the US dollar at about 95.63. So these are the 4 primary reasons which the government is trying to put some lesser pressure on. Let's also talk about the breakup of the import duty. Now, the basic customs duty earlier was 6%. It has now been revised to 10%. This takes the total effective duty from 6% earlier to 15% now. Remember, additional agriculture cess has also been levied to the tune of 5%, and hence the effective duty now goes up to 15% from 6% that the government was levying earlier. So that's as far as the breakup of precious metals duty is concerned. Let's also talk about the quantum of gold India imports over the last 4 years. Remember, India imported gold worth $38 billion in FY23. That shot up to nearly $60 billion in FY25 and $75 billion in FY26. As a percentage of total imports, gold imports contribute about 5%. That's the figure as of FY23, and that has risen to nearly 5% in FY26. That's the total quantum and the percentage of import of gold that we do as a percentage of total imports that are being done into India. Let's also talk about a couple of other parameters and how it is likely to have an impact on jewelry stocks, and we are already seeing negative reaction on many of these counters. Higher gold restocking cost is likely to weigh heavy on their profitability. Demand slowdown continues to remain a concern. Remember, many of these associations have already highlighted that because of Prime Minister Modi's appeal, they've seen a slowdown in footfalls over the last 2 days. Margin pressure for unhedged players and wedding demand is likely to get deferred. Remember, we are in the thick of summer wedding season, and that demand is likely to get deferred as a result of this import duty hike and consequent increase in gold prices that we are seeing in the domestic market. But we'll see a shift in trend. Heavy gold jewelry will now see a shift in consumption, and lightweight jewelry format could perhaps get more demand. Lab-grown diamond categories and diamond-studded jewelry makers could actually benefit as a result of hike in import duty that has been done. So that's the shift in demand that we could perhaps see as a result of hike in import duty. So yes, the government has gone ahead and hiked duty, and this is likely to weigh heavy on jewelry makers, but perhaps a shift in trend could do some bit of lesser damage to these jewelry makers.
Okay, let's try and understand what this really